and welcome. You're watching the weekly edition of Your Trades on ET Now with me, Snehisha, and today with me is Ankita Saxena. Ankita, it's been an interesting week to sum it up because, we've seen higher highs coming, we've also seen some lows coming in, but nonetheless, it's looking good for the week because we have ended the week with Nifty in the positive territory, 2.2% higher for the course of the week. This is the week to date move coming in on Nifty, and Nifty has advanced for the third week. It's also hit its 1 month high. So things seem to be looking good. They've in fact started to look good. We don't want to speak too soon when it comes to a market recovery, but well, yes, it's also the action coming in from the broader markets that was one to highlight this week because you had Nifty mid cap that hit its 1 month high as well. You had Nifty small cap, however, that was a real outperformer over the course of the week because consistently it's been outperforming all its peer indices, and this was the second straight month of gains coming in for Nifty. It's also at its 2 month high, and you also have the Nifty small cap that's at 4.5% for the week to date basis, followed very closely by the Nifty mid cap with gains of 4.1%. If you take a look at sectorally what made the buzz, it was the entire realty pack that was shining away in trade last week. In the week that went by, you had the likes of Macrotech, which is low now, Oberoi Realty, all of them were leading. PSU banks have hit their 4 month high this week. Very good seller moves coming in on PSU banks as well. Bank of Baroda, Canara Bank were your top gainers there. Nifty IT hit a new record high this week. TCS, Tech Mahindra, Persistent. You had everybody from large cap to mid cap IT participating in this rally. Nifty Metal and Nifty Pharma have advanced for the third week. Energy is up for the second straight week in a row. So it's all looking good. Autos were up over 2% this week. However, what did not do well was the entire consumption pack, the FMCG pack, because that has snapped its 2 week gaining streak. And Marico and Britannia have been the top drags when it comes to the market, especially when it comes to the Nifty FMCG index. The second big event to talk about was the RBI monetary policy outcome, wherein the GDP outlook has been lowered for an FY25 basis. Inflation outlook has been taken higher, and the biggest highlight today was the cash reserve ratio has been brought down 50 bips to 4%. The commentary is sounding mixed, but it is looking optimistic going ahead. So you had banks and PSU banks that were in focus in today's trade as well. Largely, this is what has been happening over the course of the week. But Ankita, lots of stock-specific action. You had certain pockets that were buzzing. Bitcoin also needs to be mentioned. Lots of action happening.
Well, yes, you've summed up the entire market, Snehi, but yes, a lot of pockets that were buzzing, especially Bitcoin. It's been on a tear of late. In fact, since the time Donald Trump came into power, and with his stance on Bitcoins and the change of guard, has of course seen that big rally on Bitcoin prices as well. But a couple of other names that were in focus today, of course, the banking names, because of the RBI policy, the CRR cut by 50 basis points to 4% was a big positive for banks. HDFC, BOB, PNB, in fact, all the SBI, PSU pack also, and PSU has also been on a tear. In fact, the PSU banking names have been doing pretty well for themselves. The re-rating in the sector that has come in, PSU banks, they're up almost 5% week to date. But a couple of other names, we had Maruti Suzuki on the back of the price increase news that was coming in from January 2025. There was Paytm on the stake sale, in Japan's PayPay. We also had Zaggle that was up more than 4%. We had GRSE on the back of a contract win. We had Rights again on the back of an order win. We had Nykaa. All of these counters were in focus today and buzzing away in trade. And of course, MCX that was trading at life highs as well today. So these were the names that were largely buzzing in trade. But to get you more perspective on markets and how they're going to how are they likely to move in the future, let's get Rajesh Palvia, who's the head technical derivatives and research Access Security. And we also have Ajay Bagga, who's a market expert, joining us. Thank you so much, gentlemen, for joining us today. Mr. Bagga, let me come to you first, and let's understand the markets right now. Do you think the markets have really bottomed out? The rally that we have seen in the last 1 week, do you think that the corrective phase is over? We have bottomed out, and what we are seeing now is a bull run. What we saw earlier was a correction in a bull market.
Yeah, we were in a correction in a bull market, and bottom, I think Rajesh will be able to identify much better. But on a fundamental perspective, what has changed? One, this week we saw pretty strong flows coming back from FPIs. So that was welcome. Second, the key part today from the RBI governor's policy statement was that they are seeing the economy as having bottomed in Q2. And now the leading indicators seem to be pointing to an incipient recovery in the second half of the year. I think that will be the most crucial part for the stock market to take out of the RBI policy. If the economy has actually bottomed out, and if you look at the November quick PMIs at 56 plus on manufacturing and 58 plus on services, India is doing pretty well economically. We do get these headlines of slow and all, and people who don't understand the word or who were too young to have seen the actual stagflation have even gone ahead and called India stagflationary. That's not possible. Your economy is growing and you have a nominal growth of 10% plus. You are no way a stagnant economy. So behind the headlines, if you look, I think the economy bottoming out is very critical. And I would say probably Rajesh will endorse that the market probably bottomed and we are on an upswing again within the longer structural bull market that is India.
Bhaga, thanks for the view coming in. Rajesh, that's exactly my question to you. Tell us what are the levels that you are spotting on the charts, on the technicals heading into next week. And we've seen quite the momentum coming in, but I don't want to get too optimistic and get too happy about the market recovery that we've seen. But can we now start getting a little optimistic about what's expected to come in the future? Because we've just very recently seen a very massive correction coming in. The FII sell-off was a big pressure that was looming on our head. Do you believe now that there are only good days for the market coming ahead?
Definitely, there are going to be good days for the market. I think seasonality perspective also, December is a month where, most of the 85% of the time market, shows the bullish traction and always end up in the green trajectory. And I agree with the Bagaji, yes, definitely market seems to be bottomed out as now comfortably Nifty is holding about 20-day, 50-day moving average. Inverse head and shoulder breakout is already there on the Nifty chart, which clearly giving us sign that, yes, there was some pause in today's session at 24,800, which is a immediate technical hurdle for the market. But yes, we believe that, the way broader market has recovered in last 2-3 weeks, this clearly giving us sign that, this is the fresh energy again, coming back to the street, and again, confidence in the investor as well as on the short-term traders are again, coming back on the street. And we have seen a very smart recovery in Nifty mid cap, small cap, as well as, stocks which were, significantly corrected on the large cap space also. So most of the sectors have recovered from their recent low. We believe, yes, this upward trajectory may extend. 25,000 to 25,200 would be the positional target for the Nifty. Yes, a minor hurdle at 24,800. Once we take out, these targets can be achievable in a short period of time or in the month of December itself. So buy on dips is the strategy for Nifty. 24,500 is the level where we are keeping our stop loss to hold the long position. For Bank Nifty also, a very strong buying action in most of the private as well as in the PSU banking space. And the way Bank Nifty has moved up almost near to the 53,500 kind of level, I think if any follow-up buying action comes above 53,650 kind of level, then possible rally can extend to 54,000 to new all-time high trajectory for Bank Nifty also. So I think we believe that, in the month of December, we may see a new all-time high trajectory for Bank Nifty, as most of the large cap banks are holding at their near-term, short-term breakout levels, and possible a new all-time high we can see in the month of December. So one can hold their long position in Bank Nifty as well as in the banking stocks at this juncture. Our stop loss for Bank Nifty now placed at around 53,000.
All right, all-time high could be seen on Bank Nifty. In fact, that was a question, Rajesh. But thank you so much. Just 1.7% away from all-time high on Bank Nifty. That's what we're seeing in the month of December. But with that, it's time for us to slip into a short break. Lots more coming up on the other side. Stay tuned.
Hello there, welcome to Your Trades Weekly Edition. Let's keep it going with our experts who have joined us on the show, Rajesh Palvia and Ajay Bagga. Mr. Bagga, I'm going to come to you now for my next question. I want to talk about what we've seen earlier in the day today when it comes to the monetary policy announcements coming in. Now, do you believe that this reduction in the cash reserve ratio that we've seen is enough to ensure that growth is guaranteed, it continues going ahead while also keeping inflation in check? And I'm asking you this in context with everything that we are seeing globally, because we also have a lot of geopolitical pressures that are coming into play over here and to some extent are also affecting our economy to whatever little extent that may be. But we have these measures that have been taken back home. Give us your sense on what you think this reduction in the CRR could mean for us potentially going ahead.
Yeah, the CRR reduction is very welcome. It injects immediate liquidity over the next 25 days into the system. So it will help to keep interest rates low. We are getting into the busy season in terms of the credit markets, and it is good that liquidity will be made available. Secondly, banks which earn 0% on CRR can immediately buy government yield government bonds, or they can lend this money out again. So the NIMs for banks improve as the CRR is brought down. CRR actually takes out money from the banking system. So this is a normalization because it used to be 4% before COVID. It's come back to 4. In terms of the broader policy, I think the RBI missed a step today. But again, they have been proved wise in the past as well. When even in the COVID, they did very targeted kind of liquidity injections, be it mudra loans, be it other subsidizing other pockets of liquidity. So probably they are seeing further than the market. But the only problem is, even when they start cutting rates, it will take 9 to 12 months to flow through the economy. So are we getting too late already by holding these rates for the 11th time in a row? That is the big question. People are saying 0.25 would have not made a difference or anything. But you must understand that today, if you cut rates, tomorrow it does not impact the economy. It takes 9 to 12 months to, with a lag, it comes into the economy. So did we miss a step today? Only time will tell. I would have preferred a rate cut. Personally, I think we are well primed for it. You need counter-cyclical measures, and the government doesn't seem to be bringing any fiscal counter-cyclical measures right now. So the monetary policy had to do the heavy lifting. We stopped at only the CRR cut. I think the rate cut would have helped the economy. But irrespective of that, with the government spending picking up, and then the budget, we have an opportunity to see what happens. So we have a good, exciting 60 days ahead of us, and I'm expecting a pre-budget rally as well to come in the markets.
Right. Mr. Bagga, I want to take a leaf from what you just said, that while you would have expected something on the monetary policy, a rate cut perhaps, counter-cyclical to really help the markets. But, there's one more thing that possibly could be aiding the market is the FIIs coming back. Now, FIIs who were net sellers in the month of October and the first week of and the first half of November have now turned net buyers. In fact, if I look at the data month to date, there's already buying coming of almost 13,765 crores coming in by the FIIs. So if this is likely to sustain, could this be a big fillip for the markets to rally in the future?
Yeah, it will be, because the domestics were doing the heavy lifting. And now with the FIs also coming back, it becomes a double barrel gun. So definitely it will help. And now it's emerging that one of the big causes of FI outflows could have been the changed SEBI rules in terms of what the funds could invest in, and their diversification, and looking for the ultimate beneficiary of these funds. So maybe that hot money has got flushed out of our markets, and now the genuine money is coming in. That time will tell. But definitely we were expecting with mid-January, as the new allocations come in, that FIs would return. But these days, in this always online markets, we have seen the January effect, the Santa Claus rally. All those have got mitigated because arbitrage is being played against it. So these could be FIs coming in anticipation of the January effect, and we are seeing Christmas coming early to the Indian markets.
Christmas coming early to our Indian market sounds rather good, Mr. Baga. Thanks for that view coming in. Rajesh, I'm going to come to you and I want to discuss a sector with you, that's been seeing rather mixed moves coming in. It's done decently well over the course of the week, but it's not done anything great, and it's in fact lagging the biggest sectoral gainer by quite a lot. I'm talking about Nifty Auto as a pack is what I want to highlight, because we also did have auto sales that came in earlier this week. It was a largely mixed bag coming in over the course of the week. We've heard two major players, Hyundai and Maruti Suzuki, that have also announced price hikes. Do you believe that amid already such a mixed auto sales numbers coming in, Hyundai in fact was also a miss on expectations, and they've also gone ahead and further announced a price hike? Do you believe that this is also going to eat into the market share of some of these players who are going to be taking a price hike, or do you believe in the longer term going ahead this is going to prove to be a very productive measure for all of these companies, and this could in fact also lead to the Nifty Auto recovering?
So, in the recent correction, auto index has slipped below to Nifty auto index has slipped below to 200-day moving average. But yes, we have seen a recovery from the recent fall, and now Nifty auto index is flirting with the 200-day moving average. We have witnessed recovery in most of the large cap auto stocks from their recent low. Stock like Tata Motor, Maruti, Mahindra and Mahindra, all these stocks have recovered from their recent swing low. The way these all stocks have consolidated on the lower band, and then a recovery is there in last couple of trading session. We believe that there is a possibility that some recovery we may see in the auto stocks also. For recovery or for pullback, I think Tata Motor and Maruti, these two stocks are looking very attractive, and I think the way these two stocks have consolidated for last 2-3 weeks, and now breakout is already there. We believe that these two stocks can be looked at for near term to short term perspective for pullback trade. We expect that Maruti can extend its gain. Possible upside target for Maruti we can see towards 11,800 to 11,900 in the continuation of this up move. So 11,100 could be a stop loss. Again, in the Tata Motor, very strong buying action in today's session, and the way stock has moved up over 800 level, I think here also there is a potential to continue further more upside, and a possible target towards 840, 850 we can see. These large cap stocks will help Nifty Auto Index to cross 200-day moving average, and then once this index crosses those level, I think Nifty Auto Index is ready for another rally, and then rally can extend to 24,600 for Nifty Auto. So I think most of the beaten down auto stocks are now showing traction in terms of recovery. So one can look at all these stocks. Tata Motor, Maruti, Mahindra and Mahindra are our preferred choice at this juncture.
All right, Rajesh, we have come to that time of the show where we ask you to pick out stocks for us. Now, good weeks of run, at least for the benchmarks, 3 consecutive weeks of gains. But tell us, in this market, it has been a rather volatile market. Where do you see value? What are going to be your picks?
So I believe metal is another sector, where we are seeing good traction, and we believe that metal can perform well in coming week. Jindal Stainless is looking attractive. JSL is the ticker. I think the way stock has recovered from its recent correction, and stock managed to give breakout above its previous swing high, stock comfortably holding about 20-day, 50-day moving average. So Jindal Stainless can be a looked at to buy. Upside target we are projecting towards 780. Keep your stop loss around 720. Another sector that we like is from the IT. So Cyient is looking very attractive, a very strong buying action throughout the week. And the way stock is almost close near to 2000 level, I think here we could see furthermore follow-up buying action in the coming week. We are projecting target towards 2100 for Cyient Limited. Keep your stop loss around 1960 to buy this stock. And third stock, that is again pharma stock. Some of the pharma stocks are showing good traction. Dr. Reddy is one stock where we believe that after the correction, now stock has managed to cross 20-day moving average, and the formation on the daily chart is clearly indicating that this stock can extend its gain. 1320 is the near-term target where we are projecting. Keep your stop loss to buy this stock with 1220.
Yes, thanks for that view coming in, Rajesh. So Jindal Steel, Cyient as well as Dr. Reddy are on Rajesh's radar. But on that that note, gentlemen, I'm afraid that's all the time we had on the show. Thank you so much for joining us and sharing your valuable views about what the market heading into next week could look like. But viewers, with that, we're completely timed out on this special edition of Your Trades. We'll take your leave. Thanks so much for watching.